I don't think global markets are fully priced in a a more a longer war between the US and Iran. Right now, I say this is a no trade zone.
While the Middle East is plunging into war and chaos, with the disruption of energy supplies and the risk of higher inflation, the big question is what happens to global markets and crypto if this conflict drags on?
I own rocks in the ground. I own magic internet money. And that's basically it. There's nothing to do. There's only to wait. Wait for them to print the money.
We talked about all of this in our latest interview with Maelstrom co-founder Arthur Hayes. Before we start, remember this video is by no means financial advice, just educational content. Also, if you enjoy our content, don't forget to smash the like button and subscribe to our channel. That will help our channel grow. I'm Giovanni, let's get started. The macroeconomic situation is changing dramatically. So how has this war changed your outlook when it comes to global markets for 2026 and on Bitcoin specifically?
I think I posted my portfolio, like a very high level view of what I own, and it's just like I own rocks in the ground. I own magic internet money, and that's basically it. And so, if we're talking about energy disruption, well, then the rocks in the ground in places that aren't getting bombs, those are going to become more valuable. Or the rocks in the ground that are able to be shipped to places that consume them that aren't getting bombs, those are going to become more valuable. So all of your, mineral, energy, ag, all these commodities, as long if this war continues on in the future, I don't know how long it's going to last for, but the longer it lasts, the more disruption. And these systems are nonlinear. When you shut something off, it's not like, okay, Iran and the US declared peace, therefore oil production goes right back up. No, if you destroyed all this infrastructure, you've got to rebuild it. It takes time. And then you have to have confidence from business leaders to come in and reinvest in this region. Do you have confidence to go rebuild your refinery or to send ships through this thing just because, Trump and whoever the leader of Iran has agreed for now for a ceasefire? They had a ceasefire in June of last year. Less than 12 months later, they're at it again. So what's to say that in the next few days, if there's some sort of truce or deal, that in another 12 months, Trump doesn't bomb them again? We don't know, right? And so this is the uncertainty that's going to play on folks reinvesting in the region. And so I think the longer this goes on, the harder it is to rebuild that confidence and that trust. And the more we're going to have disruption to these critical trade flows and energy supplies. And on, over time, I think that means that central banks will print money to sort of like wash away the effects of this, which is why I think in the medium term, Bitcoin could benefit the longer that the war goes on. But at the right now, I say this is a no trade zone. You've got the position you have. Don't alter it. Don't increase risk. You should only be reducing risk. And so right now, what are we doing? We're sitting on our hands and just watching the charts. We're not doing anything.
Why do you think that Bitcoin held up so well in case of this crisis? Because it has been performing better than gold stocks. For once, it is behaving as this safe haven that many people believe it to be, but usually it's not. So why do you think the situation has changed this time?
Bitcoin is down 50% in the last 6 months. So I'd say a minor bounce off of the the low doesn't really prove anything.
Yeah, you mean that it's already being hammered down so badly that there is very little room to go further low.
Maybe. And then also, I don't think global markets are fully priced in a more a longer war between the US and Iran. All the research that I read says, oh, it's going to be a week. Trump has a plan. He's not telling us what the plan is, and he's going to achieve it in a week, and they'll have a deal because it benefits both sides, and then we'll go back to where we were a week and a half ago, which is everything's fine. Consensus, and we can see that in the markets. I mean, S&P and Nasdaq aren't really down that much given the enormity of what could transpire in this region. Yeah, oil's at like $80 or 75 to $80. Nothing crazy in terms of a spike in oil prices. So I don't think people don't believe this war is going to last very long. Whether or not that's the case, we're going to find out.
Right. I believe that probably the worst case scenarios would be if eventually Trump will decide to send boots on the ground in Iran. In that case, probably the markets will start appreciating that it might be a very long war.
Yeah. Might be just like Iran and Iraq. 2 decades later, whoever the American president is at that time is talking about withdrawing troops from Iran. They've spent umpteen billions of dollars. And so I don't know why people want to buy a 10-year treasury if, Trump has said everything's on the table. Whatever his objective is, we don't know what it is. He's willing to go as far as putting American troops into Iran.
Now I want to get into your core thesis here because in your latest post, as you mentioned, you made the point that the longer this confrontation, this war between the US and Iran drags on, the more likely, essentially, funds are required for the military industry, for weapons and so on, and therefore there is a higher probability that the Fed is going to lower rates. There is going to be a higher probability that there will be increasing liquidity flowing into the economy, and therefore Bitcoin could benefit from that, right? But I was reading some other analysts today that have a completely opposite point of view on this. Once you have such a disruption in oil, gas, the concerns of inflations are going to increase, and therefore banks are going to adopt a more hawkish approach to monetary policy, and that is not good for Bitcoin. What is your response on that?
So one example that I'll cite in my favor is the Gulf War between the U.S. and Iraq in 1990. Um, U.S. chose to invade Iraq. Oil prices spiked. The Fed continued to cut rates in the face of spiking oil because they wanted to support the American war machine. Now they didn't say it like that. They had a very euphemistic term for the Middle East disruption, or some term like that. But at the end of the day, oil rose. Fed was cutting rates in the early 90s in the face of inflation, and ultimately that's why H.W. Bush lost the election in 1992 to Clinton, was inflation. So I think that if it's a choice between supporting the American war machine or trying to engineer recession so that people use less oil, the Fed is going to support the war machine. Just today, Trump announced that he has guaranteed shipping through the strait. He said, we're going to have American ships escorting vessels through the strait, and we're going to help provide insurance to maritime insurance where the private market refuses to. So how is he going to pay for that? He's going to have to print money. Let's assume that there's now the USA Straits of Hormuz insurance, and your ship unfortunately gets bombed by an Iranian or Houthi drone, and now you're out hundreds of millions of dollars. Well, okay, the U.S. government's going to write you a check. Where's that money going to come from? They're going to have to print the money. They're going to have Scott Bessent's going to issue bonds. Someone's going to have to buy those bonds. If someone's not buying the bonds, then the Fed's going to have to monetize the debt. So already within 4 days of this conflict starting, we're seeing Trump promising things that have massive financial implications, and the only way to pay for those is to print more dollars. And so, are you saying that the Federal Reserve is not going to step up and help the American empire win its war? I don't think that's ever happened in the entire history of the United States. The Fed always does what is necessary to attempt to finance the war.
Okay, but that's the US reaction to such a situation. But what about central banks all around the world? They wouldn't have the same incentive to behave in the same way.
I mean, it's going to be interesting what Europe does, right? Because gas in Europe is up, what, 50% in some countries, or in the last few days. They have no oil, so they import pretty much everything, and so now they're much more affected than the United States ever would be because of this energy crisis. So there's two ways, right? Either the ECB says, "Oh, we're going to engineer a massive continent-wide recession so you use less oil," or they stand by, do nothing, and the national government goes, "Oh, I see that you've been impacted by these things happening in the Middle East. We're going to give you a subsidy." How do you pay for the subsidy? You print more money, and then the ECB buys your bonds, right? And so I think that there is a choice. We'll see what happens. I think that the politicians will choose to increase energy subsidies so that people don't vote them out of office for essentially supporting the United States.
Can you make like a sort of timeline of these events so that our viewers can get an understanding of what your medium to long-term outlook is when it comes to specifically Bitcoin price?
I mean, I think that Bitcoin will be much higher in by the end of the year than it is right now. Does that mean I would buy Bitcoin right now? I wouldn't buy anything right now. I think that right now is the time to just hopefully you have some spare capital. The time is now to do nothing. There's nothing to do. There's only to wait. Wait for them to print the money. It's futile to try to say, "Oh, I read some analysts about the war, and they think it's going to be 5 days versus 6 days, so I'm going to go and buy whatever you're going to buy." Right? You don't fucking know. Everything you read is propaganda. You have no idea what is actually happening, whether Iranian, Israeli, United States, Western Europe. You have no fucking idea what is actually happening. We see the videos that people are posting about things, but like what's in the minds of these leaders, what their actual goals are, we have no idea. All we see is the propaganda. So just wait. If the war lasts long enough where central banks are printing money, then they print the money and then you buy it. If they do nothing, you do nothing. And so I think it's foolish to say, "Oh, I have to start buying now because in 6 months' time, Bitcoin is going to be, up or down, whatever percentage." And then you put on a trade and, war is, who knows how the war is going to end. And all of a sudden you start losing money and then you exit the trade and you've just like, lost a little bit of your capital because you had no conviction and you have no idea what is actually happening. So, yeah, if you had to pin me to a number, I have no fucking idea. I think the Bitcoin will be higher by the end of the year. I think a lot of these things will play out by then. Would I put fresh positions on right now, given the state of information that I have? No. Right now, I am doing nothing. I'm just watching.
In the last 6 months, the Bitcoin market has been in a downturn, and I was just curious to know what your core thesis is for explaining this downturn in Bitcoin.
So I wrote an essay a few weeks ago called "This Is Fine" about my theory that Bitcoin is acting as an early warning indicator that there's a massive credit destruction event brewing, especially in Western financial markets, which I believe Bitcoin follows more in terms of the amount of fiat liquidity printed, especially from the United States and the US dollar. And that basically comes from looking at how does Bitcoin perform versus the NASDAQ, which in recent history has been pretty correlated. And what we've seen over the last sort of 6 months is the NASDAQ's been flat to minor down, while Bitcoin's dumped what, like 50% from the all-time high. Why is that? I think that Bitcoin is forecasting that there's going to be a massive credit negative event due to AI disruption. And we've seen the start of that with the crash of these SaaS companies, these software companies out of the US who now have competition from firms like Anthropic, where a agent can do the job of somebody with a very expensive SaaS subscription for $10 a month. And so these stocks have gotten hammered. The people who extended credit to these companies have gotten hammered. And now we're starting to see the beginnings of firms like Block. Dorsey last week announced that he was cutting 40% of his workforce because of efficiencies gained by using AI productivity tools. So if we expand that out into a larger framework, I think that Bitcoin is telling us there are going to be a lot of formerly high paid workers, especially in the United States, who consumed a lot of things, who had a lot of debt, and if 10 to 20% of those folks are eradicated due to AI efficiencies at a lot of large corporations, even small startups, then how is that debt going to be serviced? And if the banks that lent all this money to these people can no longer get monthly payments, then the solvency of these banks comes into question as well. And this is what I believe Bitcoin is telling us because it's moving in lockstep with ETFs like the IGV, which tracks US SaaS companies. And we're seeing, Nasdaq treading water because obviously Nvidia and some of the other companies are, doing quite well selling the hardware of this capex build out. So that's kind of where I've landed on why Bitcoin has dumped 50%, where the broader, international and U.S. equity markets have pretty much held flat or increased over the same time frame.
When you talk about this AI-related crisis, which seem to have to do with the fact that a lot of people are gonna become jobless because of this technology revolution, it seems like a very far away, still a kind of far away scenario, like a long-term scenario, or you see it like as something that will play out in the next 6 months.
I think it's going to surprise us how quickly certain types of firms adopt some of these AI tools. I think Nick Carter posted an interesting graphic maybe last week about the exponential increase in the proficiency of these AI agents to do tasks that a knowledge worker could do. And it's advancing faster than we can comprehend as humans. And so right now people are like, oh, every other technology implementation, yes, people lost their job, but over the long term, productivity increased, more people were employed, and they made more money. And so everyone assumed that this AI thing is is a nothing burger. It's just people freaking out. Nothing's gonna happen. Yeah, sure, a few people lose their jobs, but they're gonna find new jobs, and it's gonna be okay. And I think that we're grossly underestimating the types of change that we're talking about. We're talking about adding another intelligent being that can do the work that the highest paid people in our global society would do: accountants, lawyers, bakers. Anyone who manipulated digital symbols over the past 50 years has done much better than everybody else who manipulates physical things. And now that's going to change, at least for the short term, where companies can immediately realize massive savings, like Block for it fired 40% of its workforce, stock pumped 20% of the day that they announced this happening. It's not that Block is losing money or they had, a bad quarter. It's like we're doing well, but we could do even better if we had 40% less people. That's what's going to happen, and in increasing fashion. In a market like the United States, where you have very high labor flexibility, meaning a company can fire you pretty much at will whenever they want, very low government support for workers relative to other places around the world. But in the United States, you have a lot of this consumer credit culture where people who are earning hundreds of thousands of dollars a year have a mortgage, have credit cards, have student loan debt, have all these things that income finances. And when you take away that income, then all of a sudden, they have to start choosing what they spend their money on. And I think that's what's being underappreciated. And it's not that 100% of people are going to lose their jobs. I said 10 to 20% of people lose their jobs. The amount of leverage embedded in the banking system in the United States, especially in the banks that don't have a government guarantee, the smaller regional banks, those are the ones who are going to go bust very, very quickly.
Just to get a sense, like, are we talking about like 2 year time frame or something like that?
I think that the actual job losses might take 1 or 2 years for the unemployment rate to rise that high. But let's say the unemployment rate in the US goes from 4 to 8, 7, 8%, right? Just doubles. And then people say, oh shit, what types of firms are firing these people? Oh, it's all the technology firms. Why are they firing them? Oh, because they realize efficiencies with AI. And then people freak out like, oh, if it's gone to 7, it's going to 14% next month, right? Something insane. And then they just start, okay, well, these people have mortgages, they have car loans, they have credit card debt. Start hammering the banks, sell all the regional banks, flight to quality, JP Morgan, Citibank, all those types of institutions. And well before we get to a 10 to 20% workforce displacement, the market's going to assume that's happening immediately. And that's how you get a financial crisis.
Okay. And can you explain why you think that Bitcoin is sniffing out this scenario better than all other assets?
Because Bitcoin is essentially gets a liquidity smoke alarm. If you take a look at what Bitcoin responds the most to, it's fiat liquidity. And so if we're saying that we're going to destroy a bunch of credit in the banking system, and as of right now, most central banks, especially the Federal Reserve in the US, believe that AI is going to be positive for the economy. Productivity is going to increase. No one's going to lose their jobs. The GDP is going to increase. Taxes are going to go up. They think the AI is the best thing that's ever happened to the economy. It's going to allow every economy to outgrow all this debt that they've issued over the last few decades. And so, if the central bank believes that AI is a benign, if not positive, force for the economy, why would they cut rates preemptively or increase liquidity to the banking system? Until there's an actual crisis, until there's banks actually failing, until the depositors are fleeing the small banks for the big banks, that's when the Fed acts. Bitcoin says, okay, well, if they're not going to provide the credit and this destruction event's going to happen, then I'm selling off. And that's what I think the market is telling us. So, yes, Bitcoin, I think, will respond positively to more money printing from central banks to um, assuage the effects of this AI knowledge worker destruction. But you have to have the crisis first. So we have to go down to go up.
I was watching this interview with you, and you were saying that you do not invest in AI. What is the reason for that?
I'm dumb. I don't know tech. I don't understand. I I see too much. I kiteboard too much. I'm not trying to understand the supply chain of semiconductors and all the different types of chemicals that go into, making these new chips and every model that comes out every other week and who's making money, who's not. Fuck that shit. I'm just trying to be simple, right? What are the rocks in the ground that people need? We need oil, we need uranium, we need copper, we need food, and these are the things that have been shunned by the market for the past sort of like 20 years. If we've leaped into everything is a digital thing, and we love asset light business models. So I'm of the camp that says we're going to go back to value stocks or hard commodities, whatever you want to call it. As long as keeping it simple, and that's what I'm investing in. And then obviously magic internet money, which this is the industry that I'm in. I understand this stuff a lot better than I do what an AI hyperscaler will or won't do, or is this model good or bad, and how do you make money on these things. So I just stay away.
Right, but I think that it's also because of this AI crisis that you are envisioning, right? That you are taking this stance on AI because you think that at a certain point in a not so distant future, every all this thing will collapse and you will move in just after the crash. Is that
Well, I think a
correct?
lot of the AI stocks are like railroad stocks. A lot of people made money in railroads in the turn of the 19th century, right? But like, who owns a fucking railroad stock today? They're general use things. Now, railroads helped build cities and armies and lots of other things, second and third derivative of the railroad, and people made a lot of money on that. But like investing in the capital build out of the railroad, for most people, ended in fucking tears. People who invested in fiber optic build out in early 2000s, their late 90s. Again, yeah, some people sold to the top, most didn't, ended in tears. But we're all beneficiaries of all this great technology and capex build out. I think AI is going to be similar. They're going to spend all this money building out this general purpose technology, which is great for the advancement of humanity in the medium to long term. But most people are not going to make a return on their capital. And the market at some point will flick to, oh shit, you spent all this money. Why are you making 1% ROE or some like shockingly low number? Fuck that. I'm out. Right. And so it's a game of hot potato. I couldn't tell you when the market's going to come to that realization. And so I'm just not going to play that game.
Crypto and Bitcoin have been performing poorly compared to many other asset classes. We saw gold skyrocketing. We saw silver, in general, precious metals. We saw, yeah, the stock market performed much better in the last year or so. And so essentially, a lot of people are just not that interested in crypto anymore, especially retail, because they see so much more exciting things going on besides crypto. So can you just tell us why are you so much attached to this asset class and why are you so bullish in it for the long term?
Well, I understand it, and obviously crypto goes through cycles just like everything else. I was wrong about Bitcoin not crashing in the 4-year cycle. We'll see if it recovers this year or it doesn't. But I still believe that at the end of the day, what we know is true, unless told otherwise. Politicians are going to print money, and so Bitcoin and crypto are the most responsive to all this fiat that will be created, that is and will be created in the future, and therefore we have a structural path to number go up for things. So it doesn't mean number go up for everything. Obviously, most of the things that are in this industry are complete dog shit and are worth zero. But again, that's just any new technology field. And I like it. I've been doing this for over a decade. It's what I understand. And so, yeah, I'll deal with the bear market, and it's a great time to invest in quality founders and projects. And that's what we do at Maelstrom. So even though the prices might be down right now, I love this. This is how you get the next 100x trade for the next 2-year cycle or whatever.
In this interview that I was listening, you were saying that in 2030 or after 2030, we are going to essentially enter this era of abundance because of AI, because AI is going to make a lot of things cheaper, a lot of things more available, a lot of professions will not be needed anymore. So essentially an era where things are going to be less scarce. Um, but I was thinking that that sort of scenario would go against the debasement trade that you seem to be a promoter of, because uh, the debasement trade is essentially making the case that um, scarce assets will become more and more valuable because of the devaluation of currency. But once everything in terms of goods will become much more available and cheaper in the future thanks to AI, then this debasement trade seem to lose a little bit of its of its traction. I'm not sure if I make my thoughts
I mean, I think
understandable, but
it's sequential and path dependent. So, yes, could we have this era of AI abundance where labor is worth zero and intelligence is free, and we get to just gallivant around the world and play tennis all day? Sure, we can get there, but before we get there, everyone who had a job building stuff, taking care of kids, doing knowledge work, lawyers, accountants, bankers, they all get fired, right? They all have debt. That debt is now worth the asset that debt represents in a banking system's balance sheet is now worth zero because those cannot service the debts. And all the profits flow to the few companies that make money in AI. And so before we have a general conversation socially about how do you share this productivity, it's going to accrete to very few individuals. So the mass of people will be broke and bankrupt. The banking system that house all their debt as assets can no longer service that debt. And those with all the money say that they deserve to keep it all because they were smarter than everyone else and they invested their capital wisely. Right. So before we get to the utopia, we have the depression where we as a global society have to determine how do we share this abundance that AI could create. And if we can't learn how to share, we'll probably blow ourselves up. If we can, then we can move to the next stage and have, a utopia or whatever.
how do cryptocurrency play out in this process that you just described?
The banks are bailed out by governments, just like they always have been. So the central bank has a choice. Do I allow this credit destruction to happen and the free market to operate and, bad credits to be worth zero and clear? Or do I do like I've done every single other crisis, say, oh, the banking system's in trouble. There's all this debt that's worth zero. To keep the system going, I will underwrite it by printing the money to cover the losses. And that's how crypto goes up markedly because all that liquidity flows to the scarce assets.
And now just wrapping up the conversation, what are you looking forward the most for 2026 when it comes to things going on in the crypto industry and Bitcoin?
Hyperliquid to $150. That's my big trade of this year. I think Hyperliquid is the best project in all of crypto. It makes the most money. It takes that money and it hands it back to token holders. And I'm a markets person. It's an ultimate expression of free markets, allowing humans to trade anything, anywhere, at any time. And that's why I think Hyperliquid is going to be the best project in crypto, and the price will reflect that very shortly.
And just a curiosity, I know that you are not based in the US, you are mostly based in Asia. Why do you prefer living in Asia than in the US?
I spend a lot of time in between Singapore and Japan, but I travel all around the region. It's a diverse place. There's billions of people here, lots of different cultures, different climates, different cuisines. And so there's not like one Asia, right? It's a very diverse place, which is great. It makes things very, very interesting. And thankfully, with airplanes, you can get to most places pretty quick.
Okay, Arthur, yeah, thanks a lot for the conversation. As always, it was very fascinating.
Thank you.